I'm just giving this a shot. I'm sorry if I'm annoying you guys. I'm just trying to figure this out. But it says I'm live on YouTube multi-stream. I should be live on TikTok. I got it to work. I should be live on Instagram now. That should work. Let me see here. Oh, it does work. Let's go. So we are live on all streaming platforms right now. This is awesome. I finally figured out how to do it. But if you guys are on the live, make sure to tune in. But we are currently live on Instagram and Facebook. So I think I got it to go. Yes, I did get it to go. How do I remove myself from here though? Oh, I think I know what to do. Officially live on Instagram. What's good, Declan? How you doing? Officially live on Facebook. Officially live on Instagram, Facebook, TikTok, and YouTube. Let me adjust the screen. But we are officially live on all streaming platforms. I finally got it to work. I finally bought all the things that I needed to do so you guys can catch me on YouTube, Facebook, Instagram, and TikTok all at once with all these streams. And if you guys are on here, make sure you guys are subscribing, liking, do whatever you got to do, and comment down below if you guys have any questions. I will go ahead and help you guys out, and we will go from there. Let me just connect these over here. Sorry about that. I just gotta do this really quick. Goody box below. So yeah, we are currently live on all all platforms. Thank you, Marquise. Thanks for the birthday wish. I appreciate that. I wish I could see here. Give me a second. My TikTok. So we're currently live on TikTok as well. And if you guys are currently on here, make sure you guys are liking and subscribing. But what we're gonna talk about is the finance right now. What is going on in the money world? What is going on in pretty much all platforms that it has to do with money? If you guys are on the lives, make sure to tap the screen to like these, and I will go ahead and answer any questions that you guys may have. Comment down below. Valdo, I see that you're on here. I saw your message and I'm going to hit you back up. Don't worry. I was just trying to figure out all this and I've been sick all week and then I just had family emergencies. So I'm back online. So yeah, what do you guys want to know? Let's try this out and see how it goes and we'll see what goes from there. So yeah, just let me know what you guys want to talk about and we can go ahead and do it. Other than that, we should be straight here. Let me go back to my Insta personal page. I won't be able to see my lives, but I will go log into a different account so you're able to see the lives. But so the main conversation of today is just trying to say that, hey, a lot of people are struggling financially right now, which is a big problem. And trying to figure out what we need to do as Americans to be able to get our finances straight for sure. If you guys have any questions, comments, concerns, make sure to comment down below. Um, you're gonna see me go back and forth a lot because I don't have my other phone with me at the moment. I usually do have two phones. Uh, so make sure if you guys are on the live, make sure you guys are tapping the screen. It'll help out with the algorithm. But we have a lot to talk about. There's a huge thing. Donald Trump just spoke about doing a tariff on companies moving to Mexico. Right now, that is a big problem for America, is that a lot of big companies are transporting to Mexico. What does that mean in the long run? That means that we will be struggling to find headquarter jobs here in America. So we're going to be talking about everything. Now that I know how to work this Streamlabs thing, trust me, we're going to be moving along a lot better, a lot smoother, and we're going to be, just kind of streaming now, which is awesome. I like it. I've never experienced what it's like to be a streamer, but shout out to my brother for helping me with the Streamlabs thing and getting this all situated. It's pretty fun. I like it. It's just a lot of work, for sure. But with that being said, don't hesitate to drop a comment. Don't hesitate to ask questions on finances and all that, and we'll be set to go. I'm unable to see certain comments. Right now on Instagram Live. So if you guys are commenting on my TikTok, I'm going to go back and forth on the phone. That way I can go see it, and see if you guys have any questions, comments, concerns. That's why I need my other phone with me. So with that being said, what is it that you guys want to talk about? I appreciate you guys tuning in. This is awesome. Bank of America becomes the latest big bank to bet on a new branch. Ooh. There's a lot of things right now why Wall Street is set on board with bigger rate cuts in Q4. Ugh, that's a big thing. I believe with all these interest rate cuts, we're going to hit rock bottom somewhere along the lines, either next year of 2025 or right after election. So as an investor, people have to know when to sell their stocks, have to know when to sell everything. That way, you can buy low, sell high. Right now, stocks are beautiful. But all in all, just make sure you guys are aware that finances right now are steady rocking. Inflation rate is going to continue to skyrocket. It says the bull is back. The bulls are back and investors are chasing the market higher. I'm one of those. Right before the interest rate was released, I just had a gut feeling after reading a lot of articles, after reading this, after reading that, doing a lot of research, knowing how to invest. I saw that it was as soon as it's election year. During election year, you know that they're going to cut inflation and skyrocket the market because it'll help with elections depending on who you vote for. But I have always said it doesn't matter who you vote for. You need to adjust no matter who the presidential candidate is, because it doesn't matter. The only thing that'll change is taxes. A lot of people struggle with taxes, especially business owners, just because of the simple fact they do not adjust. So it says the bulls are back. Last week I wrote about a 50 basis point interest rate cut would be a mistake. An expert told me a bold move by the Fed could signal doom and gloom for the economy and risk triggering a market sell-off. Yet a week later, Wall Street seemed to be on board with the larger rate cuts as stock jumped. The reason it was good, the reason this was a lot of investors are happy that this happened is because, and business owners are happy that this happened, is because they know that with interest rates being lower, they can go to the bank and get more money at a lower rate and borrow more money. So it just made the rich richer and the poor poorer, because at the end of the day, the poor still cannot adjust to the inflation. So make sure you guys are adjusting to whatever the interest rate is. Again, when interest rates and stock markets and they manipulate this market, just remember that the poor will always get poorer and the rich will always get richer, no matter what the inflation rate is. The only difference is you need to adjust to inflation rates. So I hope all you guys are doing well. Make sure you guys are liking please like the live. Please like the live. It'll be a great, it'll help me out with the adjustments here, and have me hop on the algorithm. But if you guys have any questions, make sure you guys are commenting down below. I would love to interact with you guys. I'm going to go back and forth here on my TikTok and Instagram right here on my phone. That way I can catch up on comments. Castro, put me as a mod. No, I will not be doing that. So let me just catch up on comments here. All in all, if you guys have any questions, like I said, please comment down below. I would love to help you guys out. It'd be awesome. Any traders are betting that Fed will keep up its aggressive pace of easing while the central bank signaled another 50 basis point of cuts across the two remaining 2024 meeting. Traders are pricing in an additional 75 basis points according to the CME's group Fed Watch. So when Q4 comes out with the interest rates, I advise you that you guys buy now, because if they do cut it, which it seems like they will be cutting it because they don't want a certain person in office, and it's to show that, oh, the Bidenomics are working, make sure you guys are investing. I am betting on, I'm still buying more stocks, I'm still buying more crypto, I'm still investing heavy. But if you believe it's the opposite, this is the time to invest into gold and other commodities. So right now you can play both games. I am playing both games. Right now I'm buying here, selling there, but I'm selling all the commodities because I know commodities right now are going to drop a little bit lower. I believe that they will drop. Again, all of this is just for educational purposes. This is not for, I am not your tax, I'm not your financial, this is not financial advice, pretty much. So yeah, it says, experts tell me it's cooling inflation, not a rising risk of recession that will give the Fed green light. Where'd that go? Green light for another large cut. Prices fell to three-year low in August. So since 2020, 3-year low, what are we in? Since 2021 that they're saying that prices have fell. Prices have not fallen in anything. That's just a lie. A lot of things are expensive right now, and so to say that, it's a really risky move there. But it says experts tell me inflation is cooling. I do not believe inflation is cooling, because if it was, we would see a lot of things low. If inflation continues to ease, interest rates should be lowered in line with that. Nationwide Mutual Chief Economist Kathy Bozjanic explained the Fed Reserve should go 50 basis points for the next meeting, but added that they're far from neutral, so cutting 50 basis points is not necessarily a sign the economy is falling apart. It's a recognition that the policy is just too restrictive. The policy is not really restrictive. They've handed out so much money. It's just that I believe we don't have the current people that we should have in office right now. But Trump did come out and say that if American made businesses move their headquarters to a different country, they will be hit with a tariff. And he did threaten John Deere, a big industrial business here in the United States that offered a lot of jobs, to move their headquarters to Mexico. He would implement a $200 tariff. That's a huge number. So it says the Fed was able to cut by 50 basis points, not because it had to, but because it was able to. And I think That's a really key distinction. I don't think you were able to. I don't know how you were able to when credit card debt is at an all-time high. Let's see what the credit card debt is right now. Let's see. Credit card debt as of now is sitting at 1.142 trillion to be exact. And when was this updated? September 18th of 2024. To have that much debt in America right now, just off of credit cards alone, to have 1.115 trillion in the first quarter of 2024 at its highest since the New York Fed began tracking it in 1999. This is the 8th time that in the past 9 quarters in which credit card debt hasn't decreased. Well, why is that? Why isn't any of these credit card debts not decreasing? Well, it's because Americans cannot afford to buy anything with their personal money anymore. So a lot of Americans are borrowing money. Hey Ryan, how you doing? I hope you're doing good. I just switched to my TikTok. We gotta connect, man. Yes, we do. Shoot me a text message. I lost your number because I got a new phone. But please, yeah. But please add me. I would love to connect with you, and I actually wanted to sit down with you and do a TikTok, especially about a God and finances TikTok. So I would love to. Same number, yes. Not a TikTok, sorry, a podcast. I'm over here. My brain is moving too fast. But yes, credit card debt has not fallen within the last 9 quarters. That's over a year and a half now. 9 quarters is 4 quarters in every year. So that's 4. That's 2 years actually. 2 years and a quarter. So that's 12, 24 plus 3. That's 15 months that credit card debt has not decreased in anything. So make sure you guys are looking into that because credit card debt right now is at an all-time high. And I believe it's going to go even higher. Right now you just have to know how to play the game. You just have to know how to play the game. If you do not hop on this game of investment and just starting a business in the tax code, if you do not know how to play the game, you are not going to be happy with the current market or the market that is to come. So if you want to be wealthy, you're going to need to know how to invest. You're going to need to know the tax code. You're going to need to know a lot of things. So I'm only going to be on for a little 10 more minutes and I'm going to hop off here. But credit card debt is at an all-time high. It says the 8th time and has 9 quarters, which credit card debt hasn't decreased. The only decrease during the period in the first quarter of 2024. However, it isn't unusual for credit card debt to dip in the first quarter. That's happened in all but 3 years, 2000, 2001, and 2023. Since the report began in 1999, a decrease in the second quarter would have been far more surprising. Credit card balances have risen $372 billion since the first quarter of 2021. Americans' credit card debt is at $215 billion higher than the record set in the fourth quarter of 2019 when balances stood at $927 billion. However, thanks to a record interest rate, stubborn inflations, and myriad other economic factors, credit card balances are likely only to climb. These record balances are light years above $478 billion, seen more than 20 years ago in the first quarter of 1999. Here's a graph of what inflation has done to credit card debt. Let me move this here. Let me see if I can make this smaller so you guys are able to see it on TikTok and Instagram. So as you guys can see, 2024 Q2, we continue to skyrocket here to in billions. This is in billions. So total outstanding credit card debt balances in 1999. So 1,000. This should be in the billions here. If you guys have any questions, make sure to comment down below. Like I said, I'm going back and forth from TikTok and Instagram to view how this is going. So yeah, this is interesting on what's going on here. What's going on with the market right now? I mean, if we look at stock market today, let's look at a graph reflecting 2024. Let's see if we can get a graph on here. Let's see. Okay, here we go. This is from Yahoo Finance. Tech strength rolls on. I am a big believer in investing into tech, whether that be like Microsoft. I'm a huge believer in investing in AI. AI is one of those big things that people should start investing in because sky is the limit with AI. If you can get in, right now it's still early for AI, but once it becomes regulatory throughout the world, you're going to see good numbers with that. So with that being said, in my opinion, I do think AI is a good thing to invest in right now if you want to see more money. Since the start of last year, the S&P 500 is up a robust of 42%. This return is nothing to scoff at, with the annualized rate of the return standing near 26%, almost triple the index average annual gain over the year. So it is very important to... Hola, ¿por qué no haces videos en español? I can start doing videos in Spanish. Yo sí los puedo hacer. Yo sí los puedo hacer, pero lo que voy a tratar es poner una capción en español para ustedes. With that being said, but if you have, si tienes unas preguntas ahí los puedes poner y yo te los puedo responder. But if we isolate the performance of tech stocks, we see a clearer picture emerge. Over the same period, the S&P 500 Index Tech, which houses NVIDIA, the market's main character for at the moment, as well as Microsoft, Apple, and 2 other AI beneficiaries. Again, AI is huge. Give me a second here, guys. I'm on my 3rd computer right now, so but if you guys have any questions, make sure to comment down below. Would love to answer them. Again, make sure do not hesitate to ask questions. I know it's a little early right now, so a lot of people are at work, which is totally fine. Ow! So I sprained my ankle the other, like 2-3 weeks ago, and my ankle's been in pain since. Excluding the tech sector, the S&P 500 is up a respectable but much closer historical average of 24% over that period. So as of now, if you're investing in the S&P 500, you are looking at a 24% return again, the name of the game is to invest. If you want to be wealthy, you need to invest. There's no point in being rich. Rich and wealthy is not the same, people. The concentration in U.S. tech stock is featured, not a flaw, of the AI theme, BlackRock wrote. BlackRock even commented on that. So, as the analysis noted, stocks in the tech sector collectively grew their earnings 23% over the last year in the first quarter, according to the data from FactSet. Earnings for the S&P 500 as a whole grew 5.9% over the prior year in Q1. Do you want to know why people are not investing? And this is a number one thing that why people are not investing, and it's crazy. It is because you have more people gambling on sports than people investing into an S&P 500, into an IRA, into a 401k, into their own business. This is why people are being left behind financially, because people continue not to invest. People continue to gamble. Investments are not a gamble because you are looking at a collective number that there is a 24% return rate every year almost into investing a 401k, 401k into your business, into your stocks, into your IRA. There is rate of returns that are positive, but people continue to gamble away their money. Gambling, with sports, you just don't know. People think, oh, I know sports like the back of my hand. No, you're still gambling because there is a chance that there's upsets. So make sure stop gambling away your money here, people. But it's crazy to me that people continue to gamble their money away, and I'm not sure why. So yeah. But if you guys are on the live, I'm going to hop off now. I only said I was going to be on for 10 more minutes, which I have been on for 10 minutes. So yeah, make sure you guys are tuning in. Would love to talk to you guys even more. I will be live a lot more now that I know how to stream this stuff now. Over the long run, corporate earnings are the most important driver for stock prices. So, like I said, make sure you guys are investing. Invest, 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 invest. That's all I can say. I will see you guys later. Have a good one. Much love. God bless.